bracket number one. The Case-Shiller data is out. It just hit this morning. So we've got like in a week of low news, we have news breaking this morning. All right. So I'm actually going to go over to, and we'll link up his entire text thread or maybe his Twitter profile. This is a Twitter follow I would encourage anybody on Twitter to do today if you're not already doing, which would be follow Lance Lambert at
I'll follow
News
him right now.
Lambert.
Just did it.
Yeah, good. Nicole is following now. He's at Fortune Magazine. In his bio, it says housing is the business cycle. He covers housing better than almost anyone I've seen on Twitter. So it's a great follow. This morning, as the Case-Shiller news was coming out, his first tweet started the day with a new CoreLogic U.S. home prices will be negative on a year-over-year basis by Q2 2023. We can also link up the Market Watch article, which says home prices fall for the fourth month in a row in October, according to this Case-Shiller index, which was released this morning. Let's go through some more and let's show the chart here.
There's so many
for the
charts.
2007, 2008, 2009, and 2022 tweet that Lance sent out this morning. So 27, 28, 29, and then 2022. Years that have seen U.S. home prices as measured by Case-Shiller decline by plus 2% in a 4-month window. Okay, so you see that there are 3 years consecutively where home prices have declined by plus 2% in a 4-month window. Those all happened in 2007, 2008, 2009, understandably so. And then it hasn't happened again until just this year where we saw, which I just referenced according to Market Watch and Case-Shiller, this 4-month drop in home values. Okay. I subtweeted that and said, quote tweeted that rather, and said, you will not see a 3-year run this time. Okay. So a little prediction here for the next couple of years. We've got it in 2022. We'll probably see a 4-month run in 23. I don't expect it to be a 3-year run like we saw in 2007, 2008, 2009. I think somewhere in 2003, values and maybe even, as early as the middle of 2003, you're going to see some kind of a bottom and bounce back. That would just be my thoughts based off of, we still have no indications of inventory coming back. Let's get back to some of these tweets. At its June 2022 peak, the pandemic housing boom saw U.S. home prices rise 41.4%. The 2.4% dip between June 22 and October 22 brings total pandemic housing boom gains to 38.1% through June 22. U.S. home prices as measured by the Case-Shiller National Home Price Index were up 9% in 2022. Through October 22, total gains have slipped to 6.5%. So year over year, we're still up, Nicole.
We're definitely up still. Yeah.
All right, let's go to his last, or one of his last tweets here. New U.S. home prices as measured by Case-Shiller again are negative 2.4% since June 2022. So right now, seasonally adjusted since June, we are in the negatives. This is nationally. Your market might be different. Let me know in the comments where your market is sitting as it relates to home values. And let's just do exactly what we just read here. Like in the comments, let me know from June. Okay. So maybe the end of June, from July 1, the second half of the year. All right. This is the second biggest home price correction of the post-World War II era. This one that he's referencing here from June 2022. It tops the negative 2.2% between May of 1990 and April 91. However, remains far below the 26% drop between 2007 and 2012. Yeah, I would say 2.2%, 2.4 right now, 2.2 in the 90s is nothing like 07 and 12, which was 26% drop. Okay. The reason a negative 2.4% national dip counts as the second biggest home price correction of the post-World War II era is nominal home price dips are rare nationally. Okay. So obviously, again, in your market, they may not be that rare. It may be different depending. Maybe you're in a military based market. Maybe you're in, an oil-based economy, and things can fluctuate based off of that. A 4-month negative 2.4% dip comes out to a 7.37 annualized pace. So if this continues from June to June, we will see about an 8% drop, just under an 8% drop in home values. Nicole, that would mean that essentially the previous 12 months rather would be completely erased in many markets. I know there are states in the Northeast that saw just about an 8%, 6 to 8% increase the last 12 months, right? Some of those 20% gains, when we look back on 12 months, have been long gone here,
right.
For some time. Nicole, what sticks out to you here with these national numbers as Case-Shiller? And listen, the reference in October, so I think we're still going to see a continuum as we get into January and February and March of declining data. What sticks out to you on Case-Shiller's index today?
There's a lot. I'm really trying to go through all of his tweets. I mean, he's pinning a few on here that I guess I don't know. Maybe I'm still feeling like sort of wildly optimistic too.
Maybe too optimistic.
I think maybe I am, because I hear 2%, and again, we always talk about healthy markets. I'm never really worried about a 2 or a 3. I'm never really worried until it gets over up or down by 5s. But it's all very interesting to see. Again, especially when he draws these changes out over the years. I definitely something to keep your eye on and to certainly read through. I'm still trying to be wildly optimistic here. I think, especially in our market, our inventory is still so low. So it's hard for me to sort of wrap my brain around prices going down until I start seeing inventory a little bit more. But again, I do think that it is something to definitely watch.
My optimism for the real estate market stops, or let me rephrase that. My optimism for the real estate market, I think, is abundant, but it stops when you make comparisons to 2007, 2008, 2009. If that makes sense, I think there's, or rather better put, because I think I misspoke that as well.
A little bit.
My optimism goes up.
Yep.
When comparisons of 2007, 2008, 2009 come around.
Yeah.
Because I think there is absolutely no comparison.
There is no comparison.
So my long-term, my 3-year outlook, my 5-year outlook, my 7-year outlook on real estate and the prices, the home values, is really strong. My optimism of the next 12 months, the next 18 months, depending on the market, isn't that strong. Okay. So I do believe we're going to continue to see, like I've been calling for 12 months, maybe the best prediction of 2022 is my Cold War prediction, because it is happening. November saw a 35% drop nationally in sales. There are a lot of agents that are feeling it with their pending sales in December, and they're going to feel it with their commission checks in January and February, because they're going to be non-existent for a lot of agents, because they're cashing in checks now, November, December, for the work they did 6 months ago. And they're going to feel the pain of the lack of deals in what we had in November and what we're seeing in December, where there is a cliff happening in the amount of transactions that are happening. The really strong agents are scooping up what is out there. The cream is rising to the top as we go into 2023. That trend will continue. But when I see these comparisons, and I love the tweet where it shows 2007, 2008, 2009, 2022, I have strong optimism when comparing to those markets. Those drops were 25% plus in home values. We won't see a 25% plus in home value. There's absolutely, in my viewpoint of the future, no way we get to that. To your, credit, Nicole, you mentioned inventory. Inventory is still dramatically low in comparison to, the pre-pandemic boom. We also just,
Well, and again,
I-
prices were plummeting in '08 too because there was so much inventory. I mean,
yeah.
it was like saturated with shit like that year. So and it actually even up here went up until almost 2012 too. It was just, there was just so much stuff. And right now there's barely anything. And like, again, to what you're saying too, it's that Cold War, or the rates and then what they bought it for. And they want to move up, but like they can't because they refinanced at 2 and now it's at, like a 6. So it's
Yeah.
definitely a
And
different environment.
the Fed's doing everything they can to fight inflation. But when you borrow as much money as the US government does, and you're in debt as much as we are as a nation, it's inevitable that inflation is going to be a long-term thing that we deal with. I mean, even when they get this current, exorbitant inflation under control, we're still going to see inflation across assets for a long time. Just there's no other way out of the amount of debt that we have, the amount of money printing that we do as a nation. And so home values, in my opinion, will not plummet. There's very low likelihood of that happening. Put some good data here. I just want to shout out the Twitter handle at News Lambert once again, because great follow, and he's up to the minute. I mean, this Case Shiller came out 9 a.m. this morning, if you're seeing this pod when it was released.
Yeah.
And he's got tweets coming out about it just minutes later. So he's on it. And, some things to think about. I don't believe the news, the data is going to be in the favor over the next couple months, which means you really got to look closely, compare that stuff to your local market. Nicole brought up the point about, our local market, is much different from, say some of the West Coast markets where they're
Yeah.
seeing a over 10% drop in values in certain markets right now.
Yeah.
So market to market is going to be wildly different. Hey guys, appreciate you checking out this episode of The Real Word. If you want the full episode, go over to the Broke Agent YouTube. That's where we're hosting the full podcast. If you want to continue to see the segments broken out and the short clips, stay right here on The Real Word YouTube.